Hello, everyone. This is Clay Chase with Torrey Hill Capital, and welcome to the Taseko Mines Non-Deal Roadshow presentation for April 27th, 2023. Trust and hope you're all well, having a good spring. Maybe the snow and rain has stopped for a while. It certainly was a little crazy out here for quite a while. So different weather we're certainly having right now. But as usual, the company we have on today is very timely. And I'm glad you're able to listen to what they have to say right now, because a lot of times timing is real important. And I think this is one of those times for a company to find out what they're doing right now. You see a lot of catalysts rolling into the company here very soon. Now, what this company does is they're a copper producer, and we feel that makes them extremely well positioned to benefit from what we see and what many others see in the market as a prolonged upward trend for the price of copper. That copper has been over $4 for quite some time. It's now a little bit below $4 right now, but it was close to $5. It's currently at $3.87 per pound, which is a pretty big price move from where it was just a couple of years ago at just around $2 per pound. So we'll talk about a few of the key value drivers that we anticipate will be driving this pricing dynamic in copper. And we'll also talk about certainly the big gorilla in the room, which is the tipping point of electric vehicles. I just was up to Northern California and back, and I could tell you this about every third or fourth car I saw on the freeway. And it's California, of course, but was an electric vehicle. Most of them Teslas, but a lot of other electric vehicles you're seeing coming out in the market right now, which I was really surprised. I didn't know that there was that much penetration so far, but you get on the road and you really see these cars out there. A lot of new charging stations too that I noticed on my way up and down the freeway there. So it's really, and I actually opened my app and looked at the charging stations on an app that I put on my phone, and it's significant in the number of places you can charge these vehicles. So that brings in a lot of demand for copper. So after today's presentation, which will last about 45 minutes, we'll have a short Q&A session. You can ask questions of our host. That being said, if you have a question during the presentation, please feel free to ask. You can do that with a Q&A icon or chat icon. You can raise your hand as well. That'll alert us to open up your microphone so you can ask the question right online. Also, post-presentation, we'll send you a short survey. Please get that back to us quickly so we can get that to the company. Okay, let's talk about Taseko Mines. Taseko is a mid-tier copper producer. Their primary operations are in British Columbia, Canada. Their flagship project is called the Gibraltar project. It's Canada's second largest open pit copper mine. So they're producing a tremendous amount of copper up there, or mining a lot of copper up there. I think what's really exciting, and I think is a real key value driver for the company right now, why everyone should really be taking a close look at Taseko, is their second project, which is in Arizona. It's called Florence. It's a different kind of project. It's not an open pit. It's an in-situ project. It's very low cost. It's very low impact. It's very environmentally sound. We'll talk a lot about that project today. And they're just about the finish line on that project, it looks like, in terms of getting it complete, permitted, and then into final construction stages. In addition to these two projects, Taseko has a strong portfolio of additional both copper and gold properties that they are having various stages of development, kind of in the pipeline, if you will. And if we have some time during the presentation, we'll talk a bit about those as well. Taseko trades on the, I think I just changed the screen here. Get that back. Taseko Mines trades on the NYSE exchange on the ticker symbol TGB, on the TSX main board as TKO. Currently, Taseko is trading at $1.65 a share. In the U.S. market, gives it a market cap of $475 million. With us today to discuss Taseko's operations is the company's VP of Investor Relations, Mr. Brian Burgo. Hi, Brian. How are you today?
I'm good, Clay. Thanks very much.
Great. Well, I'm going to stop sharing my screen here, and that way you can put your presentation up, and we'll be all ears going forward here. There we go.
Okay. I can't share my screen. Can you enable me? Good. You see it?
Looks great.
Okay, there we go. Thanks for the intro, Clay, and thanks everyone for taking the time to join us today. Yeah, I think we've got a pretty compelling story at Taseko. I've been here coming up on 18 years, so I've been through a few cycles, been through a lot of growth, and yeah, it's been put in a lot of work and a lot of effort. I had a lot of fun as well, and the reality is we're just getting going. We've got a lot of things ahead of us. So as Clay mentioned, I'm going to focus on two key projects today. First is our Gibraltar mine. It's in south central British Columbia, just about a 6-hour drive from Vancouver. It is the second largest open pit copper mine in Canada and one of the top 4 or 5 in North America. So a very large open pit, steady state operation. And this has been our cornerstone foundational asset. It's been generating cash for the last 17 years, and we've been taking that cash to build out the rest of our business. Our second asset is our Florence copper project down in Arizona. We are one permit away from starting construction there, and we'll go over it shortly, but we've got everything in place from long lead items to engineering. Everything is ready, and financing. We just need that one permit. We'll start construction, and we could see first copper production from Florence in early 2025. And it will nearly double our copper production and more than double our cash flow. Most of our assets are focused in copper. We truly believe that this metal is the metal of the future. And there's significant growth ahead as the world transitions to net zero, to a carbon-free economy. We've got the team in place at the senior level to build Taseko out. Most of our senior team are technical engineers, mining engineers, and yeah, most of us have been here for 10+ years. So yeah, we've got a very experienced, high-quality management team. As you can see, we are focused in North America, specifically BC and Arizona. We like the North American jurisdiction. We like rule of law. We like knowing that the governments aren't going to steal our assets. So you won't see us chasing opportunities in other areas like South America or Africa. We know this jurisdiction, and yeah, upfront permitting can be, take a little bit longer. It can be challenging at times, but ultimately it's a great jurisdiction to operate in. We've got a very strong balance sheet, $90 million US cash on hand at the end of December. And most of the numbers you see here today are as of Q4 or at the end of December. We are not announcing our first quarter results until next week. So there's a snapshot of who we are. The other thing is we do have a pipeline of projects beyond just Gibraltar and Florence. Our other projects are all in BC, including our Yellowhead copper gold project, New Prosperity, which was actually the original project of Taseko back in the 90s, and Ali, which is a niobium project. You may not have heard of niobium. It's a very small market for it, but we've got one of the best assets outside of South America. So we might touch on those towards the end if we have time. So a little bit on our capital structure. We trade on the NYSE, and actually most of our volumes on the NYSE. Probably we trade about between 2 and 3 times our volume on the NYSE as we do on the TSX. So anywhere from 500 to 700,000 shares a day in Canada to 1.5 million to 2 million in the US. And then we are listed in London as of November of 19. Market cap today as Clay mentioned, is just a little under 500 million US, 650 Canadian. And there's cash on hand, $90 million at the end of Q4. We also have an undrawn revolver of $50 million US. And actually, we just announced not too long ago, we've added an accordion feature to that to take it up to $80 million. We do have some debt on the balance sheet as well. We've got a $400 million high yield note. We refinanced an existing note in February of 2021, and this is a 5-year note, pays a 7% coupon, so not due till 2026. We're covered by the typical Canadian brokers and banks, most of them with a buy on our stock, and our stock is widely held. We have no controlling shareholders. As you can see, our largest holder is under 5%. So yeah, widely held, and we're probably 30-35% institutionally held, and the balance would be retail. And actually, today about 10% of our equity is held by ETFs, including the iShares Infrastructure ETF in the US, which is one of our top holders. So a little bit about copper. As I mentioned, we have focused in copper. It is such a critical metal for the global transition to net zero, and we know that we will need vast amounts of copper to achieve our targets, our environmental targets. So demand is going to be there, and it always has been. Demand's always grown, quite steady growth. And where we view the pinch point, or what will cause this pinch that's coming, is the supply side. There just aren't the projects in the pipeline today to keep up with the type of demand growth needed for us to achieve our emissions targets. And yes, the copper price pulled back from its highs last year, hit almost $5 US, and it pulled down to $3.50, and then quickly recovered to where it's been trading for the last 4 or 5 months, around $4. Dipped below the last few days, but it's been trading fairly steady for between $3.90 and $4.20. And compared to historically, these are not quite all-time highs, but these are very strong prices. And most copper producers can generate very good cash at these prices. But what we view, or what we believe, is there is a supply deficit on the horizon. And we don't know if it's next year or the year after. But again, as demand continues to grow, and with a lack of new large-scale development projects, it's not just our view, it's a consensus now, is that there will be a significant copper deficit, and it could be millions of tons. Today, it's estimated that the incentive price to build a new copper mine to generate a 15% return is about $4.25 per pound of copper. So we're trading below, or the price of copper is below that today. S&P did a large study last year, about 8 months ago, they completed it. And to sum it up, what they view, their estimation is for the world to achieve its emissions targets by 2050, that copper demand will double by 2035. So that's taking the market from 25 million tons today, roughly, to 50 million tons by 2035. That's only 12 years away. And we know that the projects aren't in the pipeline to fill that gap. It takes anywhere from 16 to 20 years to build a copper mine now, to get it from exploration to development. You got to permit it, finance it, and then you got to build it. Look at some of the projects down in South America. They're at 4,000 meters, having to build a desalination plant and pump water from the ocean, 100 miles into the mountains. That's what the type of projects are that are needing to be built today, and you need a much higher copper price to build those because of the costs. So yeah, we're very bullish on the future. if $3.94 is the new trough pricing, then what will the next peak pricing be? And that's the big question, but significantly higher than where it's at today. Clay touched on EVs. This is, one piece of it. It's not a huge component of it, but obviously it's the part we see every day. I'm in Vancouver. I think Vancouver has per capita the highest concentration of EVs than anywhere. It seems like every fifth car is a Tesla or some other, mainly Teslas, but there are other EVs we're seeing more and more of now. 4 times as much copper in a electric vehicle versus a combustion engine. And it's not just the car, it's the infrastructure. Everyone who has a car wants a charger at home. All that takes significant amount of copper. So yeah, this is one piece of it, and this piece is growing very rapidly. And as Clay mentioned, jump in with questions as we go or as they come up. Don't hesitate. So we'll talk now a little more detail about our assets, starting with Gibraltar. So Gibraltar is a big open pit mine. It has a 22-year mine life ahead of it, and it was built in 1970. So, this is a very, it's got a lot of history, this mine, but it still has 22 years of reserves ahead of it. Over the 22 years, production will average 130 million pounds of copper per year. Cash costs at Gibraltar, it is a lower grade mine, so cash costs would be a little on the higher side. Life of mine costs are about $2.10 per pound. Today we are higher than that, mainly because of diesel costs. Diesel today is adding about 25 cents per pound. And we burn a lot of diesel on our haul trucks. So it has, we've been hit with some of the inflationary pressures the rest of the world's seen, but the main thing would be diesel. To replace Gibraltar today, to build it from scratch, and $1 billion would be conservative. It'd probably be quite a bit higher than that. So we actually bought Gibraltar in 1999 for $1. The previous owners had just shut it down and were effectively going to scrap it. We bought it. The price of copper was 85 cents. Like I mentioned, it had been built in 1970 and it needed some capital investment, some modernization, a bit of some investment. We kept it on care and maintenance through 2004 when the copper price started to rise. We fired it up on a shoestring budget, and with the expectation we would run it for a couple of years during a high copper price environment. Price of copper would cycle back down and we would mothball it again. Well, the price of copper never cycled back down. So in 2006, we started investing, and it turned into a 7-year, $800 million multi-phase project. And we expanded and modernized the mill. That gray building in the middle there, that is the original concentrator, which was built to about 30,000 tons per day of processing capacity. We took that from 30,000 tons per day. The first phase took it to 46,000 and then to 55,000. And then we built a whole second concentrator to take it to 85,000 tons per day, which is what it is today. So from copper production from about 50 million pounds per year to the 130 million pounds per year. To fund that $800 million, we sold 25% of the asset in 2010 to a Japanese consortium. Now, we recently bought back one of our partners. They had a 12.5% interest. So today we own 87.5% of Gibraltar. We also, we issued our first high yield note in 2011. That was $200 million. And then we also took cash that we were generating because we operated through this whole expansion era. And we took the cash we were generating and reinvested it back in the mine. Also, we have a very good health and safety track record here and environmental. We've won the safest mine in British Columbia award 6 out of the last 8 years, and many environmental awards as well. It's, Gibraltar can generate a lot of cash, especially at prices at today's level. You can see in that table there, cash costs of $2.20 per pound, today's copper price of $4, nearly $300 million Canadian of operating margin. And then, the price of copper, goes up by 50 cents. That's a significant increase in cash flow. And so it's highly levered to the price of copper. So 2022 wasn't a great production year for us. It was expected to be a lower production year based on the grade we'd be processing. And then we had some challenges in the new pit that we were mining from. And we suffered from mining dilution, which lowered the average grade for the year. So we produced just under 100 million pounds of copper per year on a 100% basis. And it was reflected in our financials, but we still generated $110 million of adjusted EBITDA. That's down from 200 million in 2021 that did have a higher copper price and higher production. And you can see on the quarterly basis, with that higher copper price, we were generating a lot more EBITDA. And in the back half of the year, that did taper off with that lower copper price. But we expect to see a significant increase in production in 2023, and then a further increase in 2024. So our guidance for 2023 is 115 million pounds of copper production. So we should see a rebound in our cash flow and EBITDA this year as well, assuming copper prices stay in this range. One of the things we do is to protect our cash flow, we do buy copper put options. So we don't hedge our production, but we buy put options to protect a minimum price. So for 2023, most of our production is protected at $3.75 per pound. So we know if, some event happens and the price of copper falls back, we will get a minimum of $3.75 per pound. So we've done that consistently since 2009, and we're already looking at opportunities to push those puts out into 2024. So that's Gibraltar. Gibraltar, there's nothing sexy about the story there. It'll just continue to operate steady state, generate cash for us. And we've been taking that cash and reinvesting it in our business to develop our pipeline of projects. And our focus for the last number of years has been on Florence. As Clay mentioned, we're going to use a different mining technology here. It's not going to be a conventional open pit or an underground mine. We'll be using solution mining or in-situ leaching. This is a process that's commonly used for uranium. About 40% of global uranium and a big part of uranium production in the US uses in-situ leaching. When in production, Florence will produce 85 million pounds of copper per year, and it will have very low cash costs of about $1.10 per pound. And again, it's got a long mine life of 22 years. So it's a fantastic asset. We've been working away since we bought this project in 2014. We've been working away, getting it towards construction, which will hopefully be starting in the next few months. We just recently, as in 2 weeks ago, updated the technical report for Florence. The previous technical report was 2017, and obviously in today's inflationary environment, we needed to update capital costs and operating costs. So we did that and announced it a couple of weeks ago. Capital costs are higher than originally anticipated, although very similar to what the market was expecting. Operating costs increased slightly as well. But over the same period, the long-term price of copper has increased as well. So factoring all those things in, we have an even better project today with nearly $1 billion after-tax NPV. You can see it there, $930 million US after-tax NPV, nearly a 50% IRR and a 2.5-year payback. So this is a fantastic project. Will completely change Taseko. As I mentioned, it nearly doubles our copper production and more than doubles our cash flow because it is so low cost. So I'll talk a little bit about the technology here and the benefits of this technology. In-situ leaching hasn't been used commonly for copper because copper is typically found in hard rock. Like at Gibraltar, we need to blast the rock, we need to crush it, we need to grind it, we need to regrind it to get that copper, to be able to recover that copper from the ore. At Florence, we have a very, the characteristics of the ore body are very unusual for a copper deposit. Mother Nature has done all this work for us. It's a highly fractured, rubbleized deposit, which makes it amenable for in-situ leaching. So what we do is we drill a well field, and the well field consists of injection wells and recovery wells. We inject a solution down into the deposit, and as that solution migrates through the ore, it leaches out the copper. And then we recover that pregnant leach solution, and then that goes to a standard SXEW plant, a conventional SXEW plant, where we strip out the copper and produce pure copper cathode. The copper we will produce here is 99.99% pure copper. Because we're not digging a big hole, because we don't have a fleet of haul trucks and shovels, there are significant environmental benefits. As you can see there, 93% less water use than a conventional open pit mine, 70% less energy consumption, and over 83% less carbon emissions. Very small environmental footprint. There's no permanent change to the landscape. When we're done here in 25 years, this site could be converted into a golf course, residential community, whatever. So it's got very good environmental benefits, which is why we get very strong support from the local community of Florence. Because in-situ leaching has not been used extensively for copper, it's been used in a few circumstances, but not extensively. We decided to build the project in two phases. The first phase being a $25 million test facility, and then commercial production. So the test facility, we actually had to go through a whole permitting process for. We got those permits, which there's two key permits. We got those permits, and then we built the test facility in 2017 and 18. We operated it for 18 months in 2018 and 19 and produced 1 million pounds of copper. So it's smaller scale, but we still produced meaningful amount of copper. The wells we drilled for the test facility are the exact same wells, same spacing that we'll use in commercial production, just not as many of them. So we did that in 2018 and 2019 and produced 1 million pounds of copper. That was phase one. From there, so we did that for two reasons, or built the test facility for two reasons. One, to prove to the regulators that we can protect the environment, operate this process and protect the environment. And two, to prove that the in-situ leaching process will work at Florence. And we proved both of those. And yeah, it was very much a successful 18 months of operation. We learned a lot about how to operate it. And we did show the regulators that we can inject solutions and we can control those solutions underground and protect the environment. After that, we needed to convert or amend those two key permits for commercial production. So the two key permits, one comes from the state of Arizona, one comes from the EPA. The state went through their process in 2020 and issued a final permit to us in December of 2020. So we've got the state permit, final, and it's done. The EPA started their process in 2021. And in August of last year, 2022, they issued a draft permit. That draft permit was then up for public comment. And then there's a 45-day public comment period and a public hearing. During that time, we received overwhelming support from the local town of Florence, from politicians, both written comments and at the public hearing. At the public hearing, everyone who spoke in favor of the project moving into commercial production. So we have very good support. So that public hearing or that public comment period wrapped up in September, and now we're waiting for the EPA to issue a final permit. We don't have a timeline for when that will be, but we do have a regular dialogue with the EPA, and they are moving the process forward. They don't need anything from us, so it's in their hands, and we expect to see a final permit here in the next few months. Again, we don't know exactly when it will be. They're not on a defined timeline, but we do believe it should be in the next few months, because they've been working on this final phase of the process for, I guess, 6-8 months now. So we believe it's coming very soon. Once we get that final permit, we are ready to start construction. So we have $230 million to remaining spending to build the commercial facility. We've already invested $80 million on long lead items, and that was done in 2021 and 2022. Detailed engineering is complete. And so we are, we get that final permit and we will mobilize construction crews immediately. So financing the remaining $230 million. As I mentioned, we have $90 million of cash on hand at the end of December. We've got our undrawn revolver of $50 million US with the accordion feature. We also announced late last year a partnership with Mitsui. In essence, Mitsui will ultimately invest $100 million for 10% interest in the project. And this is a very important agreement to complete, because that 10% or the 100 million for 10% gives you that $1 billion valuation. Now it's a 2-stage investment. The initial investment will be $50 million, and that will come upon us receiving the final permit. So we'll be able to use that 50 million for construction capital. The second will be at their option to invest a further $50 million and get the 10%. So initially it starts as a 2.7% copper stream, and then they invest a further 50 million, and that converts to a 10% equity interest. In addition to that, we did an equipment lease financing with Bank of America for $25 million. So we have roughly 200 to 225 million of available liquidity. As I mentioned, we have $230 million remaining. So there may still be a small funding gap depending how much cash we can generate from Gibraltar over the next 12 to 18 months. So we continue to talk to a small number of people about maybe doing a small equity type transaction at the asset level. But we believe it's, the project is effectively financed today. Here's a couple of pictures of our laydown areas at Florence. You can see all the long lead items that we've been ordering. They're starting to arrive. So we're very well positioned to start construction. Construction is very straightforward. It's an 18-month schedule, and it's really 18 months from board approval to first cathode production. It's in Arizona, so there's no construction window like it would be if you're in the mountains in BC. We're not going to be pouring concrete in the middle of winter. So it's quite straightforward. And yeah, as I mentioned, we get the final permit. We'll get the board to approve the project, and we'll move straight into construction. So that's Florence. I guess we have some time now to talk about a couple of other assets.
Hey, Brian.
Yeah.
Yeah, real quick. I know that this is kind of a segue here into the next section of the presentation, but we did have a question earlier, and I think you answered some of it. And we just talked about some of the public or some of the credit facilities that you might use to help finish off the financing for Florence. But could you just kind of overview? The question was, do you have any other, let's see, you have any other public, do you have any public debt, corporate bonds or anything like that outstanding? Maybe just kind of go over that a little bit. That'd be great.
Yes, we do have a high yield bond. So we have today we have $400 million US of debt. And that's a 5-year note, which we refinanced in 2021. It's due in 2026, in February of 2026. And that pays a 7% coupon. It does trade in the US. So, we're going to need to deal with that bond. It's due in early 26. So it's, that's something we'll be looking at in, late 2024, early 2025, how to deal with that. And most likely we'll be looking to refinance that. Florence should be up and running by then, but there won't be a lot of operating history at Florence. We won't have had the time to generate the cash to pay it down. Does that answer that question?
Great, thanks. Yeah, it did. Thank you.
Okay, so Yellowhead is one of our other key assets, and we bought this in 2019 for $13 million. We bought the company. They had this asset. It was well advanced in the environmental assessment phase, but this company became a victim, like many junior explorers back in that time. Back then, they just ran out of money. So we were able to buy this company fairly inexpensively and it had a great asset, which we now have. So Yellowhead's in BC, just a few hours from Gibraltar. And this will be a similar scale mine to Gibraltar. It will be an open pit. But as you can see, 4.5 billion pounds of recoverable copper, 500,000 ounces of gold, and 20 million ounces of silver. So it is higher grade. So even though it's a similar scale to Gibraltar, it will produce more copper than Gibraltar. So we bought it in 19. We updated the feasibility study in 2020. You can see capital cost then was $1.3 billion. That would most likely be higher today, given the inflationary environment we're in, but also had a NPV of $1.3 billion. It'll produce 180 million pounds of copper per year over a 25-year mine life. So Yellowhead will double our production again, or almost double our production again. But this is a longer dated project. We have 3 to 4 years of environmental assessment work to do here that we're just getting started on. Most of our work today, we've been doing technical work on it, but been spending a lot of time in the community, educating them about the project, what we want to do. And we're really gearing up to start the environmental assessment process here in the fall. So we've got, as I mentioned, 3 to 4 years of that work. We don't need to spend a lot of money here for the next 3 to 4 years while we advance it through the EA process. So we're just talking, this being construction ready in maybe 26, 27. By then, Florence should be steady state, generating significant cash. So, how we would fund a project like this, we'll have different options at that time. This is also a type of asset we would look to sell a JV interest, similar to what we did at Gibraltar. So we'll continue to work on this and advance it towards construction, but we've got a few years of work before we get there. So it's a great asset in a great jurisdiction, but still some time before we see any production from there. New Prosperity, as I mentioned, this was the original project of Taseko back in the 90s. This was the only project we had back then. This is a great deposit. Again, a few hours from Gibraltar in Southwest BC. This is one of the top undeveloped gold projects in the world. You can see in the reserves, we've got nearly 8 million ounces of recoverable gold and 3.5 billion pounds of recoverable copper. There's not many deposits like this anywhere in the world. But it's been stuck in permitting legal challenges since 2014 after the federal government shut us down or turned down the project from the EA process. What's changed here is the First Nations group in this area. The provincial government has brought us together with that First Nations group. And we've been at the table for a couple of years now, trying to find, I guess, a resolution to our differences and a path forward for the project. Can't say much about the discussions as they are confidential, but I can say, the fact that we're 2.5 years in and we're still at the table, meeting on a regular basis, shows there is a willingness on both sides to try and find a path forward. And obviously, if we weren't making progress, we wouldn't still be at the table. So, there's some pretty big obstacles ahead for this project, but it is such a valuable asset that we're not going to give up on it or just to walk away. We'll continue with these discussions, and there is a fairly high degree of optimism that we will be able to find a resolution and find a path forward. So that's, again, like Yellowhead, this project's a free option. There's obviously nothing in our equity for it today. But also, a project like this, positive news from here would go a long ways. So just to sum it up, reserves are what makes a copper mine or a copper company. And when you look at the amount of reserves, copper reserves we have in the ground, this doesn't include, our niobium asset or gold. But between our various projects, we've got nearly 15 billion pounds of copper in the ground. And on a per market cap basis, that's 30 pounds per dollar of market cap. When you compare that to our peers, and not just peers, but companies that are much larger than us, like Capstone's got a $4.5 billion market cap today, give or take. We have more reserves in the ground than them. Hudbay, similar. Oz Minerals, and they've just been acquired by BHP for $8.5 billion, and you can see how much more we have in reserves than them. So, we've acquired assets, inexpensive assets. We haven't gone out and done big flashy acquisitions, $500 million, $1 billion acquisitions. We've bought manageable companies, projects, and trying to create long-term value by buying these early stage assets, developing them, moving them towards construction and production. And then just finally, I think this graph on the top right, this is what it's all about. And it's the valuation gap between our equity value and what our projects are worth. Just looking at Gibraltar and Florence. Gibraltar's got a $1.3 billion NPV, and that's our 87.5% share. Florence has this is in Canadian dollars. Florence has a $1.2 billion NPV. You subtract our net debt and leaves you with an equity value of $2 billion, an implied value of those assets of $2 billion. Our Canadian dollar market cap today is 600 million. And so there's a very large gap there. And we believe that gap is Florence. Now, I think the market understands Gibraltar, and you could say our equity would fairly value Gibraltar less our net debt, which implies that we're getting nothing in our equity for Florence. And I think that comes down to permitting. There's been a lot of difficult permitting stories in the US, but we've gone through the whole process. Nothing has come up. We don't see anything getting in the way of us receiving this final permit in the next few months. And I think that will be, a catalyst for a re-rate. So, that's what we're working on, trying to close that valuation gap. It's been a show me story for a long time, and we keep moving it forward. We keep de-risking it from, getting the permits for the test facility, running the test facility, making the test facility work, and now in the final steps of permitting the commercial facility. So I think we are due for a re-rate, and I think it's going to happen fairly soon when we get that final permit. So we're in great shape from a balance sheet perspective. We're generating good cash today from Gibraltar. We're in a commodity that has very good potential for a lot of upside pricing. No maturities on our bonds until 2026. So yeah, we think we're in a great spot. We're quite unique in terms of our jurisdiction and how we run the company. So yeah, that's the story. I think it's fairly straightforward. A lot of excitement in the future for us.
Yes, it is. Great presentation, Brian. We work with a lot of mining companies, and some of them are pre-production. So a lot of times, big question is, well, how long is it going to be before you're in production? Well, it's really nice to see a company that has such a significant production profile, kind of at the right place at the right time. You've really benefited from this recent kind of bullish move in copper prices, which I think is there's 4 or 5 new articles out in the last couple weeks now, talking about the copper supply crunch and what they think is going to happen to the price of copper. And they're all talking, I think each one of these articles is over $7,500, or no, 10,000 per ton. Some of them are in the $12,000 to $14,000 per ton. So we're talking $6+ per pound of copper in the next 5 years. Most of them are in the next 5 years or so. So it's a great market to be in. Obviously, you've got great projects and such a great track record of bringing and delivering, the numbers that make shareholders excited. So if you have a question for Brian, please feel free to raise your hand.
One other thing I'll just bring up, and I should have touched on it, but the small to mid cap copper producers, it's a pretty small group of us, and one of them is just being acquired by Hudbay, Copper Mountain, and Copper Mountain would be the only BC-based copper miner similar to us, and they're gone. They will be gone very soon, and Hudbay paid 0.7 times NAV for them. And again, you put that, look at 0.7 times our equity value of $2 billion. That's a much higher valuation than our equities reflecting today. That's not an uncommon valuation for an acquisition. We're looking for an acquisition, but in terms of, what is the appropriate value for a Taseko? That's what we would think it should be, as opposed to where we're trading at today.
Right. Yeah. So we agree. It looks like a pretty significant discount to what you have on the board there, especially with the slide right here. I think a lot of people say, well, if copper prices go up, there'll be more production brought on. And, I think a lot of people are trying to put on more production, but, I think as maybe a year or so ago, when Codelco's CEO or chairman came out and said that they were going to have to spend $40 billion just to keep production level over the next 10 years.
And I think it's still 40 billion.
So, what's that?
And I think it's still 40 billion today.
Yeah. And so they don't have an ability to turn the dial up. And that's the world's largest copper producer. I believe still the largest copper producer, one of them. So if you'd like additional information on Taseko, you can go to their website, which is www.taseko, Taseko mines, mines.com. I believe there's a copy of this presentation, or one that's nearly identical to this one, online there. And I don't see any more questions right now. Brian, any final comments before we wrap this up?
I think we covered it, but yeah, thanks for taking the time. Any questions, contact Clay and you get a hold of me. I think it's a pretty exciting story. A lot of great catalysts here over the next little while to look forward to. And we've done a lot. Like I say, it's been 18 years now since we've been at it. So, but we got a lot of things still ahead of us, and yeah, we're looking forward to unlocking a lot of value here in the next months and years. So thanks
Great. Yeah,
for taking
I
the
think
time.
for me, the key takeaway is that you look like you're so close to this Florence permit. I think that'll be a real watershed moment for the company. So
Yeah.
those of you who are listening in, the timing of that could be important, an important consideration. So, okay, we're going to go and wrap it up here. I want to thank you, Brian, for coming on today. We look forward to having you on again real soon. Hopefully it's when you get this Florence mine permit.
Yes.
I know we've been looking forward to that for a while, but I think we're getting real close. So, and I want to thank everyone else for coming on today and taking a look at Taseko Mines. Like Brian said, if you have additional questions, feel free to just send me, call me or send me an email and get that information back to you. Great, Brian. Thanks again for coming on today. And we look forward to seeing you real soon. For everyone else that came on today, thanks for attending. And we look forward to having you on a future presentation with Torios Capital. Until then, be safe, be well. Thanks, Brian. We'll talk to you soon.
Thanks, everyone. Bye-bye.
You bet.